The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I want to start out the day by wishing everybody a Happy New Year, and let's take a look at the big thing that's happening in the world today is, folks, that yen that Mr. Z talked about last week is coming down big time. We broke through that big area of support, and we broke below 109 today, folks. We hit 108 and change, so that's getting close to the 61% retracement down here, which if it gets below that, look out. We're also, if you're watching the British pound, we've had huge moves here in the currencies. I've mentioned, usually around the first day of the year, you'll start to see some big moves. And they actually started on New Year's Day. And I wanted to, okay, let's start it on New Year's Day. Let me just show you what happened on New Year's Day, folks, because this is one of the reasons why sometimes you get really bad data. And when bad data happens, you're in trouble, because now you don't know where the actual market really is. So if you'll give me 1 second here, I will get it up here to take a look at it. I mean, I had it right here in front of me 10 seconds ago, and there it is. We'll put this up here. Here's where we were on New Year's Day. You'll notice here that the euro had a move from 114.45, 100 pips straight up, to 115.45. That was a straight up move. Now this was New Year's Day, and I could not find anybody on the other side of that trade. I looked everywhere. I called my friends at the 2 Forex bank owners that I know, and they said that they were doing virtually no business. But the real data, and this is one of the reasons why Mr. Twentyman does such great work, is actually showing here's what's happened. This is the CQG data, and this is truly the euro did actually make that type of move. Now, no, I've refreshed it, Peter. I've done everything. I've called e-signal. Oh, wait a minute. Now you're saying the chart didn't post? Uh-oh. Hold on just a second. Sorry, guys. Just give me 1 second to get back there to it, and I'll get it up here again, and we can take a look at it. Okay, let's get it here. I don't know what's wrong here. Well, I'm doing it the right way. I don't know what else to do here. Let's try. See if this brings it up. Does that help any? Oh, we have to. Okay, that one's good. All right. That's what we look at when you have data from e-signal, which also Interactive Broker, all that stuff. But that's not the real data. The real data, if you go in and look at CQG, and we'll bring this up here so you can take a look at it. This comes from our good friend Rich Anderson, and also from our good friend Jim Twentyman. You'll notice that we did go all the way up to that 115.50 level is what they're showing, and now we're trading below, 114 substantially. So if you think you're looking at bad data, you better double check it. It's very, very unusual to see this happen, but it happened during a holiday, and believe me, I wouldn't trust that data as far as I could throw it. But we're breaking down. We're down 160 pips in the British pound today. The yen is moving, and we have the euro has moved over. That's 150 pip drop in the euro, so that's another really big one. All of this is probably going to have ramifications. If you remember, the U.S. dollar, we were setting at very, very strong support here as we came into the new year. You see, we're right down at that 95.60 level, and today, we're moving sharply higher. So this could be a very, very interesting situation going on in the currencies right now, we'll be following it. We're extremely, we really believe that yen was going to go down. I mean, that was pretty easy to see. And the Canadian dollar, those of you that shorted that Canadian dollar, it also broke 100 pips last night and has now come back to that same area at 136.60. And if you get above 137 in that, I would say you'd probably want to say goodbye to that trade, because it's got a lot of things up there that tells us that it should stop at that 61% retracement on the long-term weekly chart. And if it doesn't do that, boy, then you're looking at something that could be, really, really significant. Now, we do have our friend, Mr. Norman, we call it To the Minute Winsky, will be on, I believe, on Friday, as I recall. I think it is Friday. Maybe it's tomorrow, but it's either tomorrow or Friday. Norm will be on. And then next Friday, a week from this Friday, we're going to have Bill Meridian from the Cycles Research out of Vienna, Austria, will be on. Now, one of the charts that I posted here this morning comes from our good friend down in Longboat Key. It shows the picture of the sun each day as taken from the same place at the same time. And if you'll notice that over a 365-day period, it forms basically an infinity symbol. So that's another anomaly of the Earth's mysteries that is really quite cool. Also, since we were talking about Bill Meridian, he sent me something that I thought was extremely interesting here, because it is at a time when gold hit the exact 61% retracement today, up there at that 1291 level. You'll notice that his monthly gold chart says it should be topping here right around the 1st of January and down for the next 6 months. Now, that's a big ABCD pattern in gold. It lined up pretty much what, the ABCD structure was going to say it was going to do, but we'll watch it very closely. I'll just bring it up here so you can take a look at it, and you'll notice that every time, I can't help it why it's collapsing, folks. I wish I knew. Just a second here. See if the gold chart posted okay. Then I think I know what the problem is. Did the gold chart post okay? Okay, now let me try one other thing and see if this will correct it. I don't know if it will or not, but we'll just give it a shot here and see if we can get this working for everybody. Now, see if this one works okay. Did the cycle chart from Cycles Research pop up correctly? Yes, so there it is. This is what we call Italian technology. I hit the wrong button. Okay, now we're all right then. Also, remember, folks, that when we're looking at the gold-silver index that we mentioned last week, that is not acting very well for a bullish scenario. As you look at this, and we talked about it yesterday, on Friday, we were looking. Wow, this is not Friday. This is we talked about it on Tuesday, and today is we talked about it on Monday, and today. How does that work? Monday, Tuesday, Wednesday, Thursday, Friday. So this is Wednesday. We talked about it on Monday. And you'll notice here that we made the ABCD right at the 382 on the XAU, and you can see the big move we had in gold. And so there's been a huge divergence there. Usually that divergence means a great deal, but sometimes it doesn't. So this is why we look at the charts each day. So we're going to take a little break here, pay a few bills, and we'll come back. We're going to talk about some things that are interesting.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We've got Mr. Z on the line. Happy New Year to you, my friend.
Happy New Year to you, sir. Hopefully you went out and you watched some parades on TV on Tuesday. I regret I was not in downtown Philly to watch the Mummers Parade, but well, I watched a little bit of it remotely, so there we are.
What can I help you with, my friend? By the way, John, I want to compliment you on a couple of posts that you made just recently. One was the yen, and the fact that we were looking for that big move, and we've certainly got it. You know, we've really had a big hit in the last couple of days in the Japanese yen, which has been good. And also, you've been very bullish the gold and the silver, and you know, they've all been going up. So we certainly appreciate that here in the den. But what can I do for you today, my friend?
Larry, I wanted to ask you about the S&P 500, the cash index, and the futures.
Sure.
We fell down to as low last Wednesday, day after Christmas. I think the number was 2347 or thereabouts. What I wanted to ask you, I just value seeing you do your short-term chart work, and I'd like to see what lower targets in price you would come up with if, in fact, selling here in January takes us under that 2350, 2345 area. I like to just get prepared in advance with some ideas of what is possible if that happens.
Well, John, the long-term projections that I've started way back in August was at 1,500, and how I came up with that's the 61% retracement of the whole move from 2009 when we hit 666 in the S&P. Then our high was 29 and change, so that 61% retracement we're bringing in right around 1,500 is what I would be. That would be equivalent to a drop like we had during between 1982 and 1987, and also going back to 2000, I believe that one was also 61% retracement. But John, since we're chatting about that, let me put in the this picture that we have from Bill Meridian, Cycles Research. This is a New York Stock Exchange composite that very similar to the S&P, but you'll notice the beautiful symmetry here that we're looking at, following the channels, and even look at the advanced decline line, how it's held those trend lines. And you make a great point, because if we go below those levels, that signifies there's something rotten in the U.S. stock market. And the one index that I follow closely for this is the money index, which is the banking index, and it also stopped exactly, at a 61% retracement. So if we go below those lows that we made at 2310 or so in the S&P, that is extremely bearish. I don't think we're going to see that yet. I think it'll be another month before we do that, but we will break it later, but we should be in a rally mode here into January and possibly early into February is what I'm looking at.
I appreciate that. As I looked at Tiger TV, I saw you posted, oh gosh, maybe it's 2-3 weeks of price action on the S&P March fixtures, the ESH9 contract, and I'm wondering if you can just elaborate what you would be looking at, what tools or techniques you might apply if, in fact, that December 26th low was broken. Would you be using ABCD targets? Would you do fib expansions, very short term? What would you be doing to come up with just ideas and candidates for target lows, please?
Okay, John, if you look at the bottom we made on the 25th, which was, the night of Christmas, we rallied 200 points. We went from 2320 to 2520. 2520 was really strong resistance because, you had made the equal moves. We were at a 382 retracement from way back in early December, and now you've broken about 70 points overnight here. And so the key here for me is two things. One, if you see a really, really bad day, in fact, maybe as bad as the good day that we had where the S&P was up 110 points. If you see the S&P down more than 100 points on any one day, there's trouble. Because if it can go up 110, it can come down 110 very easily. Any close below 2360 pretty much tells me that we're going to go below the 2300. And if we do that, that sets up that pattern that we're looking at 1500. That's the way it looks like. I think it'd be a great buying opportunity down there for sure, but those are the short-term parameters with a view of what the long-term could be. But this is a bearish market. There's I don't see any bullishness in it other than they're having a really great rally here, and but this doesn't look very good technically.
Larry, thanks so much on that. I will just share an observation that I was making past couple of days, and that has to do with the Asian stock markets. I am interested in right here what I see in the Chinese stock market indices, and I specifically look at the Shanghai, or the ticker symbol I use is SSEC, and I don't know if that's a Shanghai Shenzhen composite. It's something. It's pretty broad. But that opened weak last night, and it's retesting its October lows, not having broken it yet. But I'm reminded of what happened in January of 2016, 3 years ago, where there just was precipitous selling coming out of China for 20 days' time. And every night the Chinese market sold off that year, 3 years ago now, the E-mini futures would be following, Asian Asian holders were dumping S&P futures as well. So I'm watchful for kind of a replay of that sort of scenario here the first couple of weeks of the month. So we will see, but I share that with you.
Okay. I agree with that. These markets just, they have the appearance of something that, could be, really nasty. You could wake up some morning and there could be a development with Deutsche Bank or, something militarily or financially or geopolitically that could change the, the landscape of what we're looking at here. So the key is if we're really good here, we should rally into early January and even early into February. But after that, it looks pretty negative. So we'll see.
Hey, Larry, thanks so much for your input. Always love hearing you do the show. I appreciate it.
I love seeing your posts too, my friend, and maybe have a wonderful new year, and we'll hope to get together sometime this year. We got a new addition coming to Philadelphia in 162 days. Another little baby boy will be there, so we're going to have our own basketball team pretty soon, so it'll be pretty good.
Congratulations to your family.
Thanks a lot.
Thanks so much.
You bet. Bye-bye.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now, you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, since we were talking about Mr. Z, I wanted to post that yen dollar chart that he was talking about last week and the week before and the week before. You know, it's been in a downtrend. We broke major support when we broke below that 111 area. We talked about that, and it was really quite dramatic, the move that we've had. But we're having dramatic moves today in the euro, folks. We moved 160 pips from yesterday in the euro, and that's a huge move. And also we've moved almost 200 pips in the British pound. And you know, so these currencies are really moving. That means the dollar is strengthening. And you know, remember last year the commodities were down on a global basis about 13%. And you know, that's been a pretty big drop. We haven't had a bad crop here for the last 4 years, so we're going to be watching for these grains for a little bit of a bottoming action. We talked about the soybeans last week, of course, when we had the head and shoulders bottom in the soybean meal, and what happened was it you know, had a really good rally. I'll just bring this up here so you can see. You don't see the rally here because we did this on Sunday, and you'll be able to see it here right now. But we rallied all the way up $1,000 a contract. We backed off a little bit tonight, so that's a pretty good bottom off that head and shoulders pattern that we had in the soybean meal. So that's one that should be pretty interesting. I wanted to bring one other interesting thing to let you look at right here. This is that Canadian dollar versus the U.S. dollar that we had talked about. We've been up here 4 times in the last 4 days to that 136.60 level. We did it again today. We've dropped about 50 pips right after we hit it again, so we've been there 4 times. That's why if we get above there, that's going to be pretty bullish because it takes a lot of power to push that above that level. That basically means the Canadian dollar, you have to have $1.36 to buy 1 U.S. dollar. So the dollar is strengthening against the Canadian dollar. So and that brings us to another point that someone's asked us about last week that I was going to try to answer this week. I just want to show you, this is the chart of the Canadian dollar. This is that Canadian dollar chart that we just saw. I want to put it up here and you'll see that this is the blue line is what's happening with the crude oil. Now you can see here that from September through July, it was a very, very high correlation, and also between April and August, it was relatively good. But look what happened in October. That thing inverted. Now, I just want to show you what that means. You'll see the blue, which is crude oil, was trading up at the 61% on the weekly basis at $77 a barrel. And just if we invert that chart, and that's one of the things you have to do with cycles, because they do invert. And when you bring the inversion in and take a look at it, you'll see that we're probably looking at a really big inversion here, because we bottomed right on the low when the crude oil was making its high. That's when the Canadian dollar, you know, started to break. So anyway, that's what we're looking at. We had a request here from Ruby to take a look at the coffee market, and we'll get that up here right now to take a look, because coffee is breaking down. We broke below that $100 level, which was very, very important. I don't know what it's doing today, but there's a possibility we get down to that 94 level again. And if you look at the long-term charts on that, Ruby, you'll see that 94 is a long-term 78% retracement level on the long-term charts. They're included in the newsletter each week, but if you'll take a look at that, that's going to be pretty interesting. But once the coffee went below $100, that was not a very good sign. That was very indicative of prices that want to go lower. That's one of the things you got to remember, folks. The technical analysis works pretty good, but you got to believe it, because when these markets break below these points, especially beyond the 1.618 level, you know, you're looking at something that could be you know, rather rather pretty nasty. So we'll see what's going to happen with it, but that's neither here nor there. We're seeing the same thing you know, in the cotton market. You know, you're talking about, you know, longer term things. You'll notice here in cotton, which is, you know, we all use cotton for just about everything. And, we broke down below that 76 level, and, you're immediately, $4 a pound under that. So that's why you have to respect these levels. Sometimes they work, sometimes they don't. You try to be in the neighborhood of about 60%, but, sometimes you can't really, cotton didn't post either. Okay, let's try it again. I wish I knew the answer. I wish I knew the answer. Hold on just a second. Get it up here one more time. I think what I'm doing is get it up here, see if this will work. That might work. I think that's it. Let me know if that cotton chart came up. There we go. We're all right then. See, I think I know what the answer is. I'm trying to put the charts up too quickly, and that doesn't work. And then we were asked to take a look at sugar the sweet. And as you bring it up here, I think we're probably here today. Let's just take a look at it. I haven't had a chance to check sugar, but around that 12.15 level is a really nice 61% retracement level in the sugar. I don't know where it's trading today in the March sugar, but 12.15 should be a good low. I wouldn't risk more than 40 cents on that. So if it got below 11.90, I would say goodbye to that. Well, no, it'd be about 11.70. I would say goodbye to that one. But if someone would be kind enough to give me the last price of March sugar, I would certainly appreciate that. And then I want yeah, I would want to take a quick look here at the history that of something. I get some Elliott wave things from some of my friends, and I wanted to show you. They had a really great chart in the letter this past week. I'm not an Elliott wave person because I try to keep it as simple as possible using, it did break. Okay, it did break below 1191. See, that's not good. I would say stand aside. These commodities are not starting the year very good. I mean, they're really not. Except the gold, and I think gold's making a top in here with that 61% retracement of what it looks like. But look at this. This is a history lesson, folks. If you look at this is Sears going back 120 years. You notice the IPO came out in about 1910. And then you can see during the roaring 20s, it opened about 319 retail stores, and then it went from all the way down to below 50 or whatever it was. And then it got caught up in the big bull market from the 20s all the way through 2010. But, this thing topped back in 2004. And boy, you can see all the things. It really started when it was selling off its financial businesses. That's when the market really took off. But that was probably the wrong thing to do. But look at it, folks. From 2004, look at that circle there. From 2004 to where we are right now, Sears has gone from 125 to tapioca, 36 cents a share, and that's the end of Sears. So. Here's a great, really great company, just like Eastman Kodak was. But, that's the way it goes. These things are here to stay. Maybe Netflix will do this. And J.C. Penney's, you're not kidding. You're absolutely right about that. And, looks like Deutsche Bank's on its way too. So we'll see.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and we had a question about Bitcoin. I want to bring it up here. This is also from the Elliott Wave letter, but it'll answer the question, and that is this a bubble? And I don't know if it's a bubble or not, but we went from 19,500 down to 3,200. That's certainly a major correction, but what I want to bring to your attention here is the fact that when it was making its high at 19,000, there were actually things on the internet, which you can't believe hardly anything on the internet anymore, that said it was going to go to 1 million. And then when it dropped, down below 15,000, they said it was 33,000 by December. And then, they're just, folks, when people give you predictions like this, you have to validate it yourself. I mean, even the stuff that we do here at TNN, and especially me, because my opinions are wrong a lot. I try to tell you when I'm wrong, but sometimes we get tied up and we maybe don't cover it nearly as quickly as we should. But you just got to do the work yourself, and you got to protect yourself, because look what happened during that time. The key there was from May through July and September. You notice they had that beautiful bottom there at 8,000. Look what happened when we went from 8,000. It dropped in half again, 8,000 to 3,200. So that's the main thing to look at. So we'll see. We've had, you're right, there have been, actually, I think there's been 4 major corrections in Bitcoin since it started way back when. All of them have been about 80. I have looked at that peak. I watched it. Mr. Jameson over there in the UK has pointed it out to me several times. And the big ABCD pattern in that came in at around 3,800. We've been down to 3,200. So it's not, I don't think it's about Bitcoin. I think it's about blockchain technology. I don't know anything about it, but there's a lot of people that are putting some bucks in it behind the scenes that they don't advertise. But there must be something to it, because some serious people are doing some serious work in these things. So that's the main thing. I did want to mention this thing about this Canadian dollar, because I just want to show this beautiful ABCD here, because I've had a couple of questions this morning about it. And you'll see here, we've been up in this 136.60 area. This is the actual 4th day that we've been there. We're trading around 136 right now, so it's backed off a little bit. But the U.S. dollar is moving very, very strong. This could be the start of a big breakout in the U.S. dollar. For some reason, the beginning of the year brings in some type of a major cyclical or phenomenon that's there. It might only last 3 or 4 weeks, but we want to pay attention to that. But this is a big number here in the U.S. dollar that we held at 95.50. Extremely, extremely important. No more important than the number that we had in that banking index. And this is the key you have to watch, folks, is to watch this banking index. This is the one that's going to really tell the tale. If we get below 80 in that dollar index, the banking index, oh dear, that's going to be really, really nasty. I mean, really nasty. You could see a move of 55, even all the way down to 40 without any trouble, because that low that we made in that banking index last on Christmas Day, that low was exactly a 38% retracement from the low in 2009 on March the 5th. It was also a 61% retracement of the low from December 2016. And if you look at that December low, you'll notice that we came down into the we were coming down into the election. The banking index went down below during the election, and then it took off a little bit later. So that level on that banking index is the really, really important one to take a look at it. Let me take a quick look and see if there's any big changes here since we've been on the air here. Also, the another market that is really under a great deal of pressure today, folks, is that natural gas. Oh my goodness. Once that market broke below that 78% level, let's just bring this up because I nibbled at it myself at the 303 level and was out of it in a heartbeat because it had such a huge move. But give me a second to get up and take a look at it because it is really a big move down here. This is where I posted it on Friday, folks. We were trading at 330, and the 78% level came in at 303, and we bounced pretty good off 303. We went, well, 10 points, $1,000. But after that, boy, it was just down big time, and it gapped down big on the Christmas, New Year's Day, and has continued to go, a lot lower. So those are the major things to keep an eye on with that natural gas. And that's going on with all commodities, with the exception of silver and gold. Now, silver unusually made just a very slightly higher high, almost exactly at the 50% level, and 1.618 expansion of the moves over the past month. That came in at 59.60, and we've been to 58.5. We took out the previous day's high by half a cent when gold was up about $5, but it didn't stay that way. But we'll see. There's big numbers today in a lot of things. I mean, it's really a lot of things are rocking and rolling. So we'll see if they're going to continue that way or not. But that's what it's looking like early here. This morning here in Trading Land here at TFNN. Folks, if you're looking for some good ideas, TFNN's got some great traders there in the den, and they post some wonderful things and really smart people. So they'll give you some pretty good ideas of what's going on, in the world. This is one I wanted to bring to your attention here. This is one we had posted last week. This is the euro. I want to get it up here so you can take a quick look at it. This is the daily. You notice that the ABCD structure on this measured to 115.60. That was the high. That high that we posted a little while ago that I thought was a bad data high, which in fact it was not a bad data high. It just happened on New Year's Day. Very, very unusual. But it did complete that big ABCD pattern in the euro. So that's another one. You had gold do it. You had the silver do it. You've had another one. And then we've had the one that continues to go up forever, and that is the Treasury bonds and Treasury notes. I wanted to bring this to your attention here that, we had some really big moves here. If you'll give me 1 second here, you'll be able to see the notes here. They went a little bit higher here last night, but here's where we were as of New Year's Day. We've been as high as 22. I think 22.10 is what we've been to on this pattern here, but you got double ABCD patterns in there around that 122.05 to 122.10. And the key thing here in the euro, in the notes and the bonds, open interest for the last 4 days has dropped. Folks, that's bearish. If prices go up and open interest drops, that means buyers are leaving the market. So as soon as as soon as those guys are done, that thing just has a drop. So when prices go up and interest rate and open interest goes down, that's short covering because you've got buyers leaving the market. And that's a very weakening section in the market. So when it does hit, it hits pretty hard. So pay attention to this. This could be a heck of a move in this because the whole world thinks that the Fed has changed their mind, and I don't think so, but who knows? The Fed is reactive. They're not, they just react to what's going on in the markets anyway. So we'll see. 877-927-6648, and a Happy New Year.
The secret to being successful in trading and investing is to have an untiring, undying, and unquenchable thirst for knowledge. There are certain situations where you can absolutely understand what the next move of the buyers and sellers is likely to be, or what I like to call a competitive advantage. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 in bonds, and on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's setup 9-count and trend lines, a tool that called for a change in trend at 3:30 in the morning on the day that generated the Dow's largest daily point gain in history. If you're looking for a competitive edge, then now is the time to take advantage of my risk-free 30-day money-back guarantee trial for my daily newsletter service, Mastering Probability, which will provide you with immediate access to this live workshop, which will be archived on your members page for the next 30 days. You have nothing to lose and everything to gain. Sign up today at TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'll put up the chart of the Treasury notes here. We're trading. We got up to that 122.10 level. That completes a 50% retracement. It's also an equal rally that we had during March through September of last year. This one's been a little bit stronger and a little bit faster. There's a possibility we could go up higher, but with that open interest dropping in the notes and prices going up, that leaves that market in a very vulnerable situation. You got to have buyers keep this stuff going, and it's not working. So pay, anyway, I just think it'll be interesting to see what's going to happen here. Most of these commodities have started lower this year. It's still early, but we've got a long way to go. We got 363 days, so we'll see what happens. But I think we've got a possibility here after 4 good years of crops here in the United States. We're probably going to have one that's not quite as good this year, and this is going to cause some pretty serious rallies, but we'll be watching the patterns to tell us how they turn out. Right now on our watch list, we're watching the corn and especially wheat and the soybean meal and soybean oil. All of those look, very, very interesting. We'll have Norm Winsky will be on later this week. Next Friday will be Bill Meridian. We're also going to have Simon Only and Rich Anderson on next week to talk a little bit about the grain situation that we have moving on. And then we'll have Dennis Gartman in the following week to give us a call. Dennis was really interesting in his letter that he had a really bad year as far as trading, but it was nothing like what happened to David Einhorn from Greenlight Capital. They were down 35% for the year. That was a pretty big hit. Now, those guys, they take huge positions usually on a fundamental basis, and when they're right, they make pretty good money. When they're wrong, they get hammered. So the secret here is try not to get hammered. That's the main thing. We'll watch it, so we'll keep very, very close.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!